Welcome to today's practical planning tip by ParkBridge Wealth Management. My name is Jonathan Shenkman. I'm the President and Chief Investment Officer of the firm. I want to continue this video series on planning for change with three more examples of how things change in the market. The first is that asset class performance also doesn't remain constant over time. Intermediate Treasury bonds had over an 11% annualized return in the 1980s. Over the past decade, 2014 to 2024, Treasuries returned just over 1.3% annually, underperforming inflation. If retirees relied strictly on Treasuries, they would have lost buying power and effectively have far less money today than a decade ago. The hottest sectors vary over time as well. In the late 1990s and early 2000s, technology stocks saw a meteoric rise. Much wealth was created as investors flocked to invest in technology stocks. Unfortunately, the implosion of the dot-com bubble saw much wealth eroded. In fact, it took the tech sector around 15 years to fully recover, with tech stocks finally reaching a new all-time high in 2015. This is a staggering amount of time to experience no returns on your money just to recover your initial investment. And finally, past investment axioms can also change. There's the often repeated phrase that real estate only goes up in value. Well, real estate has gone down in many parts of the country over the years, which disproves this point. There's no example more potent than during the Great Financial Crisis. During the GFC, the U.S. real estate market was decimated in a few short months. Investors also learned that no company is too big to fail, as large historied companies imploded overnight. Companies like Bear Stearns, Lehman Brothers, and General Motors vanished. Many other blue chip stocks that investors relied on for their safe dividend took years to recover their losses. In the next video, I'm going to highlight another example of how things change in the market and how individual investors can prepare for this inevitability. And with that, I hope you found this practical planning tip helpful. Until next time, stay prudent, practical, and don't forget to plan ahead.